This fund targets inflation plus 3% over a 5-year period. We invest globally, so we've got a wide investment universe. We invest direct, so this isn't a fund of funds. We invest direct in equities, government bonds, corporate bonds, commodities, and structured products. So we consider risk, return, and correlation of all of our investments. And in order to do this, we split those assets into different categories. And this is what we call our LED risk framework. So we split assets into liquidity, equity type risk, and diversifiers. Liquidity assets are those that are easy to buy and sell in any kind of market environment. So this is things like cash, government bonds, and high quality bonds. And we expect these to be negatively correlated to equities, normally in times of stress. Equity type risk assets are, as you might expect, assets that we think are likely to be correlated to equities, again, in times of stress. But these are the assets that are really going to drive the returns and drive the growth of the fund. Assets in this category are things like equities, corporate bonds, emerging market debt, and REITs. Lastly, diversifiers. As you might expect, these are the diversifying parts of the portfolio. What we're really looking for here are assets that are going to either give us an uncorrelated return stream or assets that can help protect portfolios in times of stress, so things like put options. So we try to think about all different types of risks that might impact our portfolios, whether that's the risk from equity markets falling, bond markets falling, currencies moving around, and we'll take as many steps as we can to mitigate those risks if we think they're of concern. Where things become probably a little bit difficult is those market environments where equities and bonds correlate together. So that means that bond prices are falling, equity prices are falling as well. And in that kind of environment, often lots of different assets are falling at the same time. So that's a pretty tricky environment. But again, with our LED framework, hopefully that's when the diversifiers really come to the fore and help protect the portfolios. So ESG risk integration is an integral part of the overall risk management of the fund, in the same way really that any other financial risks are, like the strength of the balance sheet or management competency. Essentially, we aim to identify any risks related to the environment or social or poor governance that might have a negative impact on the asset, and we need to then factor this into our investment decision. This fund can be used in a number of ways. Some use it as a core fund and then put satellite funds around it. Some look to blend it with a number of multi-asset funds because they see us as doing something a little bit differentiated. Many just use us on a standalone basis and have all of their wealth invested in the funds. We take this very seriously, and I think it demonstrates nicely the trust that our clients put in us to manage their money.